partners. Mike, let's just quickly start off with Repsol. We had a Breakingviews story saying that the Pemex and Repsol separation is a good thing.
Well, it's certainly a good thing for Pemex. I mean, they actually need that cash to prepare themselves for the liberalization of the fuel market in Mexico. So that $2.9 billion is going to come in very handy. The question is you know, what's the story at Repsol? You know, we had the CEO at Pemex a few months ago being very, very uncomplimentary about restructuring at Repsol. They said that pay for the executive was far too high, and they weren't at all happy with their investment. So I think it's one of those situations where it looks like a canny exit for Pemex.
This also underlines the Repsol's challenge of spending its cash pile. Where do you think he'll deploy this?
Well, I mean, it's very difficult to see where they're going to have a decent return on investment. If you look at the refining segment within Europe, I mean, crack margins are very, very weak, and there's no visibility on them getting any better anytime soon. Also, you know, return on offshore activity is questionable. So I think that shareholders, perhaps unsurprisingly, might be quite happy if they saw more of the cash to themselves in the forms of dividends and buybacks.
Now, let's get on to Tesco now, because it's a very interesting stock. It shot up earlier this morning, and now it's down about 0.7%. Numbers were bad. What was behind the roller coaster ride, do you think?
Well, I think we were almost used to Tesco disappointing, so I think perhaps there was initial relief that the numbers weren't worse than expected. But then I think the market is now really focusing on the lack of visibility going forward. You know, Philip Clark has declined to give any real guidance as to when this decline of earnings is going to be halted, other than saying, you know, they're doggedly going to stick with the plan of investing in prices, quote unquote. So I think that's the problem, and I think you'll continue to see analysts edging their earnings forecast down.